Tesla's revenue beat but profit miss led to a 5.3% share price drop. Which of the following best explains this reaction under valuation theory? Your options are: A. Investors value companies primarily on quarterly revenue growth. B. The market capitalization is sensitive only to dividend changes, not profits. C. Earnings shortfall relative to expectations affects future cash flow assumptions, reducing intrinsic value. D. Markets react randomly and cannot be linked to performance data. And the correct answer is C. Earnings shortfall relative to expectations affects future cash flow assumptions, reducing intrinsic value. The muted reaction despite overall earnings beats reflects which investor bias? Your options are: A. Overconfidence bias. B. Confirmation bias. C. Anchoring to prior optimism and profit-taking behavior. D. Loss aversion bias only. And the correct answer is option C. Anchoring to prior optimism and profit-taking behavior. The article notes that the Magnificent Seven form nearly 35% of the S&P 500's weight. What systemic implication does this have? Your options are: A. Reduced market efficiency due to excessive diversification. B. Higher index volatility driven by performance concentration. C. Improved liquidity and risk dispersion. D. Neutral impact on benchmark tracking. And the correct answer is option B. Higher index volatility driven by performance concentration. IBM's share decline despite beating earnings was due to a slowdown in its cloud software growth. Which business model principle does this highlight? Your options are: A. Revenue stability overrides innovation in investor perception. B. Growth in core strategic segment matters more than overall profit. C. Investors ignore segment-level data in diversified tech firms. D. Mature firms are always penalized for diversification. And the correct answer is option B. Growth in core strategic segment matters more than overall profit. Investors caution amid US-China trade tensions can most directly affect. Your options are: A. Tesla's global supply chain and cost base. B. IBM's retail channel sales in domestic markets only. C. The Federal Reserve's inflation forecasts only. D. The US housing market. And the correct answer is option A. Tesla's global supply chain and cost base. The quote, "Numbers are not high profile enough to drive markets," reflects which analytical limitation in earnings season reporting? Your options are: A. Lack of price elasticity in securities. B. Disconnection between micro results and macro valuations. C. Insider trading masking market movement. D. Inelastic investor response to information. And the correct answer is option B. Disconnection between micro results and macro valuations. When executives underplay short-term setbacks during earnings calls, they are engaging in. Your options are A. Earnings manipulation, B. Signaling and expectation management, C. Insider disclosure, D. Voluntary delisting preparation. And the correct answer is option B. Signaling and expectation management. The wait-and-see approach among investors before next week's major earnings releases is an example of. Your options are A. Herd behavior, B. Arbitrage opportunity exploitation, C. Contrarian investing, D. Liquidity preference under uncertainty. And the correct answer is option D. Liquidity preference under uncertainty. A slowdown in IBM's cloud growth would most likely affect which financial ratio first? Your options are A. Net profit margin, B. Asset turnover ratio, C. Price to sales ratio, D. Interest coverage ratio. And the correct answer is option C. Price to sales ratio. The fatigue in equity rally mentioned in the article suggests which broader strategic implication for corporate leaders? Your options are A. The need to pursue inorganic growth to sustain stock momentum, B. A shift from narrative-driven to performance-driven investor relations, C. A move to suspend dividends to preserve liquidity, D. Reduced importance of ESG narratives in capital markets. And the correct answer is option B. A shift from narrative-driven to performance-driven investor relations.